I'm Andy Himmel with the Restaurant CPAs. I am beyond thrilled to spend time today with Gary Shamus, founder of Winding River Consulting. Gary spent 35 years building SS&G into one of the nation's largest and most respected accounting firms, becoming the 37th largest in the U.S. and home to the largest restaurant accounting practice before merging with BDO. Gary, thank you so much for joining me today.
I'm glad to be here.
I also need to note you're also a partner of the Restaurant CPAs, which we'll dive into that a little bit later. Just wanted to make that clear. So I'm just going to go ahead and jump right in. When you were scaling SS&G, what made the restaurant industry such a strategic focus for you?
It's all so. I got introduced to the restaurant industry back in the early 1980s when I got going at SS&G, and we had one restaurant client, may have had one or two restaurant clients, and I started working on this client. It was called Gamekeeper's Tavern in Chagrin Falls, and it became a really just a long time restaurant that had just great success for many years, but. Having been in the industry, in the accounting industry a little bit before that, the accounting industry, when you think of it, what comes to mind is, business people, back and then ties, suits, formal business, all that kind of stuff. And that's what it kind of like was for me. And when I had my first restaurant client, the things that stand out was, well, they didn't want to meet till 11 o'clock because they wanted to sleep in because they worked that night. And okay, that's a little different. And I remember going to my first meetings, and they would be dressed casually, the owners, and sometimes they'd bring their dogs. And it was just a much more casual, low-key type of environment that I just really liked. So it was like, boy, these are really kind of cool people and a little bit different in terms of a client. So I was always attracted to it really probably because of the casual nature. Not that owning a restaurant isn't serious stuff, and it is, and it's, business and careers and things like that. But it just the owners just seem to have a little bit a less of a staid type of attitude running their businesses. So I kind of liked that. So I liked it. I was attracted to it. Started picking up some local businesses, and then I had one moment in my life that was really it was the moment that changed everything. And what had happened my entire career was I had spent my career going to continuing education for my CPA licensing. And you were required to do it. It's a big deal. I used to go to conferences all the time. So every conference I ever went to was a conference that was full of CPAs. And somewhere in the late 1990s, I went to a restaurant conference called RFDC, Restaurant Finance and Development Conference. I actually went with my colleague, Brad Saltz. It was in Las Vegas. And it was like an epiphany for me. And the epiphany was every place I'd ever gone was with a bunch of CPAs. Here I go to this conference, and what it was a bunch of restaurant owners and potential clients. And they had a conference sponsor center, and I went to the sponsor center, and everybody had booths and hundreds of people with booths. And I walked around, and there was only one CPA firm there, and that was Ernst & Young, E&Y. And they were fishing in a different pond than we were. So this epiphany was I'm spending all my time going to this continuing education. And here, boy, if I just spent my time going to this restaurant, it would be like a huge opportunity to get new clients. And it really was, it was really a game changer for us in terms of realizing that we could be trying to find clients at conferences like this. And then what I learned from there was that there was always like bad connotations with restaurants and restaurant owners in the CPA industry, small businesses, family owned, high failure rate, lots of cash, and accountants try to stay away from that. And what we learned is there really was nobody in this huge industry. I think if you look at numbers, I think next to the federal government, it was the second largest populated industry with employees, and nobody was in it. Nobody dominated it. There were a couple firms back in the day, Leventhal Horwath and Penelker Foster, that both had failed over time, that had practices. So some of their offshoots from there had smaller restaurant companies and restaurant CPA firms, but there was just nobody who had any kind of substantial firm at the time. So, once we put that together, we learned it was a huge opportunity to try and focus on the restaurant space.
What were some of the initial steps that you took? So when you had this realization that there's this untapped opportunity in this in the restaurant space, what were some of the more critical pieces that you started focusing on?
Well, let's just say I knew what I was good at and what I wasn't good at. And I knew I wasn't a great CPA, but I was a really good marketer and business developer. So my focus was I looked at this from a business opportunity standpoint, not from a service standpoint. So I always say there was really two sides to it. The first side was building the mousetrap. How can I attract the clients? How can I grow it? And then the second was, what do I do if I'm successful? I have to build the infrastructure to service the clients. So two sides to it. I would say that Brad Saltz and a couple of my other partners really focused on the internal side of it. They were good at restaurant accounting. They knew what they were doing. I was good at developing the mousetrap. So my focus was almost primarily on the marketing side of it, how to grow this practice. And we took it real seriously, spent a lot of time at it. We ended up doing things like going to these conferences and sponsoring these conferences where there was no other CPA firms. And eventually there were other firms. People follow success. So they saw what we were doing and they started trying to do the same or copy what we were doing. But we did things like developing databases. We had a quarterly newsletter that went out. I can't tell you how many times I would sit at someone's desk at who knows where, some other state or city, and they'd have a pile of our newsletters on our desk where they were getting them, keeping them, reading them, and they were providing them information. And we started advertising in some of the magazines, but they were more like infomercials. We were talking about tax strategy and things like that, not really talking about us. So it was those kind of things that we did, and they just kept adding on to a point where we were just getting double-digit growth in that space for 20 years, and took it from a very small business to 20% of our accounting firm.
So I understand the marketing, the mousetrap side of it, but as you're bringing on these groups, what were some of the initial realizations that you felt, oh, wow, we need to add certain services or we need to add certain capabilities that no one else is doing, but that the restaurant industry really requires or would benefit from? How did members of your team learn about the ins and outs of restaurants? I would assume most accountants, they don't know what goes on day to day.
It's really not hard. So, most accountants who were servicing restaurants would have generic practice of many different businesses and a couple restaurants. So did they ever really spend the time, getting underneath it and trying to understand what was there? And they didn't. I mean, it was a low return on investment for them because they only had a couple restaurant clients. It wasn't hard if you really focused on it. And, I'm not the greatest tax person in the world, but I even knew there was 5, 6, 7 things we would look for. And generally the accountant who was handling that just didn't take the time, didn't have the knowledge, didn't have the expertise, didn't have the repetitive nature, really knowing what was there. So it really wasn't that hard, and it really wasn't that magical. But it really just took a little bit of experience and knowledge and know how to do it. And there was really no reason for a firm that had 200 clients and one restaurant client to go dig in something like that.
Right.
But when you had a firm with 200 clients and 40 of them are restaurant clients, you have a better chance of knowing what the right things are to do.
I remember as a former client of SS&G with my restaurant group, I remember the first time I attended the CFO boot camp, and I couldn't believe what a production, what an event it was, what an investment that SS&G made in creating this event. I couldn't believe. I think Richard Melman from Let Us Entertain You spoke that year.
He did speak that year. I remember we were in downtown Chicago, and I remember the air conditioner was making a lot of noise, and I was upset about that because people really couldn't hear him. But he was a great speaker, and I remember, if you remember, he didn't have a prepared presentation. What he did is he just spoke. You were allowed to ask him questions, and he answered the questions.
I just remember leaving the conference, and it did change a lot of how we operate internally. I met people that I never thought I would meet, and I just remember thinking, "Wow, what it's amazing that that investment was made." And the conference grew how it did. It just almost became an iconic thing you did every year, in addition to the Restaurant Finance
Well,
Development
well,
Conference.
well, when you talked about, the mousetrap, well, that was part of the mousetrap. And I don't even remember exactly how we got there, but that has actually served me well in my Winding River career because we do boot camps now for partners of CPA firms. But from our perspective, that was ingenious. There was no competition. We focused on CFOs. What we did is some of the speakers were always profiling our people. We would bring in other speakers, certainly, to help attract the audience, like a Melman. And then in a perfect scenario, we'd have a bunch of clients that were there too. So the potential restaurant client for us or new client from us would be talking to an existing client and saying, boy, are these guys really that good? Or they're thinking, does my accountant really know this? And it just played out amazing. Every time we had one of those events, we did it twice a year. We would cash in new clients in every one of them. And a client could be significant. It could be as much as $100,000 in fees. So it was just a great way for us to kind of like serve up some potential opportunities for us. And, we learned from it too, to have Melman and have other people, very successful restaurant people from the Cooper's Hawk and people like that. And it was a way for us to learn too. So it was just more than us understanding the tax. It was us as a team also understanding the strategy and how to be successful as a restaurateur.
I remember one of the years, you were nice enough to invite me to dinner, and I happened to sit next to Brad Saltz, and I talked his ear off the entire night. I was excited to sit next to him, and then the next night I had a dinner somewhere else, and the poor guy got stuck sitting next to me
Yeah,
again.
dead. Yeah.
I thought it was the funniest
Well,
thing.
hopefully the second day you did more listening than asking. So,
Well, I have issues with that, as you know, but I did try.
okay.
Why do you think so many restaurant companies are still working with a generalist or a broad-based accounting firm today?
Because it's secondary to them. It should be much. There's a whole lot of things you got to be doing right. I'm a restaurant owner today, and there's all kinds of things. It's a very complicated business. You're performing, you're just so many different aspects to it, and for some reason, most restaurateurs just put the financial side of it on the back end. Just get the financial statements done. They really don't give it enough attention as they would. And they don't really understand, there is a difference in people in working with firms that really have knowledge versus the ones they don't. It's the return on investment is just, you can't even measure it because of the advice they can get from a tax perspective working with someone who knows what they're doing versus what they don't know what they're doing. But they just don't value it as much. And, part of what hopefully we're going to be doing with Restaurant CPA is elevating that in the industry, and people realize how important and beneficial it could be to a firm and as a component of their whole restaurant operation.
So as someone I'm a restaurant person at the end of the day, and as someone who had been in that situation, I had 2 or 3 locations, but to me, my relationship with our accountant was simply compliance and doing all the end of the year work we had to do. And that was it. And it wasn't because they did anything wrong. That's just what I thought, an accounting firm did. So I had no idea. And I assume that's a big piece of it.
Well, then that's where I get back to, some
Yeah.
of these practices look like they're generic. And, I served every kind of business you could possibly have over the time. And I think I have a good, broad, general knowledge of it. But there are things that are specific. And to any business, I work with steel clients, and with the steel client, some of the big things working with them was things like using inventory techniques like LIFO and things like that, which would be valuable to them. Restaurants have their own issues as well too, and then other businesses as well too. So there's a lot of commonalities, but there are the specifics. And if you could deal with somebody who knows the specifics about your industry, no matter what industry it is, you're going to be much better off.
When I think about the return on, and I don't even think we spent much more per year, but let's just say a return on investment when we made a switch to SS&G. I remember sitting with your partner, Adam Barabitsky, And I went through the locations we had, and the ones that were struggling, he showed me a metric that he pushed his clients to always look at when they were signing new leases, that took into consideration the amortized cost of the lease, everything. And when we ran the numbers, I would never have signed those leases in hindsight. And those ended up being pretty impactful in the long term for the company. And that's just one that I think that was the first meeting I had with him.
And that is, that is one of the issues you're looking at. And that issue is the amortization of, and this has to do primarily with tenant improvement costs and how to take care of them. And if you throw tenant improvement costs, the money they give you into to your asset value, then it's depreciated over a long period of time. But if the tenant improvement costs can be handled on a reduction of interest, or an increase of interest payments over a short period of time, you'll be able to write it off with your rent. So you may be able to write it off over 5 years versus capitalizing and writing it off over 25 years. Now, over the whole period, what's going to happen is you'll get the same amount of tax deduction, but under the first method, you're going to get the deduction almost immediately, and you're going to get lower taxes paid immediately. So things like that, most CPA practitioners would never pick that up.
No,
and
that
it's
was
pretty
the first
easy.
meeting, which actually I it's kind of hard to swallow sometimes. But there's no question the value of having someone that looks at restaurant companies daily. I mean, he was immediately able to drill down to the lowest hanging fruit, literally in the first meeting, which was impressive. How has the restaurant industry evolved since you were building SS&G?
One of the big changes in the restaurant industry that I think happened in 2008, and I want to say it was more of an event than an evolution. And in 2008, when we went through the big meltdown on Wall Street and Lehman failing and all that kind of stuff, and pretty much every client that we had in our portfolio, including my firm, saw a decrease in revenue. And I used to throw the number out 10 to 15%. So I had this accounting firm forever. We always grew. This is the only time period we didn't grow. We actually receded, as did most businesses. And up until that point in time, I think the general investment community looked at the restaurant practice as being very risky. And what happened is in 2008, when you looked at that, what you saw is the average reduction of a restaurant company during that time frame was like 3%. And the rest of the country was 12%. And everybody had looked at the restaurants as being so risk-oriented, they didn't want to get involved. And once this happened, what really became clear is that restaurants were a part of America. They were a part of our economy. And when you saw the 3% reduction and actually got under the hood, what you found out was that in most cases, people's numbers in terms of people visiting them didn't even change at all. What happened was their ordering habits changed slightly because of the pandemic. So instead of getting a steak, they might get chicken, and things like that, but they still use the restaurants. So when that happened it kind of opened up the door to private equity. And people like Capital Spring and Garnett Station and other private equities, all of a sudden, the riskiest business was maybe not as risky as they thought. So that was a big change in terms of where you started seeing private equity taking a look at the restaurant industry and getting involved in it. And along the same lines, too, I think what you saw was, people used to always say to us is, such a risky business, why are you in that business? And, I could be wrong, but I don't think we ever lost a restaurant client that really went bankrupt. People sold, things happened. But in the most part, they were very stable in terms of businesses, which was contrary to what the general public thought. So I think that all really started happening around 2008 going forward. Over the last few years, a lot of the changes have been, related to technology, and some of the technology or back office type things, understanding things like, ideal food costs and revenue per seat and per table and best-selling items. So technology, it was a very good fitted to what's happening. So I think you're seeing a lot more technology going into it. But you still have, the challenges of being a very labor-oriented industry and high turnover. I remember I used to think in my accounting firm, we used to turn over, our goal was to turn over 8 or 10% a year. The big firms were turning over 20% a year. And I go to my restaurant clients and they turn over 167% a year. They
We
would
would
turn
pay
their
out a
entire staff.
bonus. We paid out a bonus if we were under 110%.
Yes.
That's how.
So it was just very, it's just, it's hard to do that where you have such a changing workforce all the time.
Yeah, I do remember coming out of COVID. I do remember 2008, really understanding that restaurants were part of the fabric of the country. It just wasn't going to change. I do remember
Yeah.
that. What I think was one of the biggest changes in recent times, from my perspective, was coming out of COVID. The dynamic with hiring, the type of people that were interested in coming into the restaurant industry. There really did seem to be a pretty big change, and I still think it's going to take a lot of years to really look back and understand what the ramifications of the shutdown look like.
Yeah. Well, you go to Europe, which I always found to be very interesting, and you would look at people who are wait staff and things like that in Europe, and that would be a career job for
Right.
them. And you look at the United States, and it would be a career job just for a very small percentage of some of the long-standing, long-term institutional restaurants in New York. But most of the time, it was just in and out of new people over another. And I think the way that they handle it in Europe is just a much better way to do it. And has to do with the living wage and all that kind of stuff and what restaurants pay and tipping and all that. But, that is definitely a big hurdle going forward.
Why do you think this was the right time to launch the restaurant CPAs?
Well, I don't know if it was the right time or not. It just kind of like it happened. And, those that don't know the story is that, this all relates back to in my Winding River consulting, a client that we work with called Hall CPA, who owns a company called the Real Estate CPA, doing the exact same thing that we're basically copying what he's done, but we're focusing on the restaurant industry. And what he did was like, I look at it as a genius. I think you could also say it was really kind of logical too. But what he did is, he used this world of social media, to for advertise and to market what he was doing. And it's like everybody who buys anything today, the first place you go is to Google or something else, and you want to look at reviews online and see if you want to work with these people or not. And he basically just took the accounting industry in that fashion like nobody else I had ever seen do it, with incredible success. And in my mind, it's like, boy, kind of wish this was around. When we built our restaurant practice, it was like we had to go on airplanes to go visit people. And
you had to create conferences.
Yeah, we had to create conferences, and it was very much more challenging. And what this guy was able to do was just figure out how to use technology to drive some of that content going forward. So it really was more opportunistic, seeing what he was able to do and saying, hey, can we do that same thing in the restaurant industry? And, and certainly we're trying to build a business and make some money off of it. And, that's what our goal is. But if we're successful and we can match a restaurant company to a very responsible and resourceful CPA, we're helping that restaurant company big time going forward. So our success is going to be a win for a lot of people.
Coming out of COVID, again, going back to that, I certainly was much more comfortable with Zoom relationships. I would never even see the person except for maybe once a year, but that became the norm. I do wonder, from a timing standpoint, the reduction on geographic barriers and what that impact is on the need for a company like the restaurant CPAs to connect people, because there's no longer a barrier. Anyone could work with anyone across the country, maybe even the world. Finding them is the hard part.
Well, doing that when we had our firm, we did it, and it was hard. I remember going out to the Cone Restaurant Group in San Diego. I worked on that when I was spending my winters out there, trying to get them as a client. And they were using somebody from Oklahoma who was friends with the owner, and again, probably not capable. And I ended up reaching out, meeting the CFO, who ended up being the son-in-law of the owner, and having a meeting with them. We went out for the meeting. The owner looks at us and they said, "What are you doing here? We were out of Ohio, but primarily it was out of our Cincinnati office. What are you doing here?" And what happened was, he was looking for another firm. He had 3 reputable San Diego firms. Each one of them had a couple restaurants, like you would expect, like we discussed. "And what are you doing here?" And I said, "Well, let me just start off by giving you a list of my 500 restaurant companies as clients, of which 5 or 6 of them are in San Diego and 8 of them in LA, and we have them all through Texas." And it's kind of like, okay, keep talking. So all of a sudden, it's kind of like, fear of missing out. I need to be with these guys because they do Lettuce's work. They do Cameron Mitchell's work. They do Famous Dave's work. They do all these other potential restaurant clients. So it was challenging then, but I got to tell you today, if I was doing it today, and we are doing it through this restaurant CPA, I just envisioned it so much easier because you could communicate through things like Zoom, it's accepting that you don't have to be there anymore. So I think it's kind of wide open, and there's no reason, that they can't. One of the aspects of it that would be a little bit more challenging could be some of the state and local issues.
Right.
Because, if you're in Ohio and you're dealing with firms in California, they may have state and local issues that are related to restaurants that you may not be as familiar with. When you got as big as we were familiar with them. But those are some of the challenges, you still have to work through.
Right. So from the restaurant CPA side, as we're having the opportunity to meet restaurants and the opportunity to talk with them and understand their size, their locations, we certainly have the opportunity to match them up based on that type of criteria, whether it's limitations with, like you said, local and state. We certainly would choose an accounting firm that had a broad reach and understanding of all the markets they were currently operating in.
Yeah, well, that's what we hope to do. I mean, I've been in the accounting industry. I've been in both industries for decades, but the accounting industry longer. And we understand the match. We understand if it's a chef-driven concept and they have one restaurant, we're not going to introduce them to the 8th largest accounting firm in the world. It's not a fit. But they need the hand-holding of somebody who knows what they're doing. And the chef-driven concept could be in San Diego, but we may have a really good firm for them in Chicago, and we'll try and make that match. So that's really what we're trying to focus on. One thing that I do know more so is that no matter who we're going to be working with, tax is really the driver. Some of these firms do have audit work, but tax is the driver. When we had our 500 restaurant clients, we did tax for all of them, and we did audit for a third of them. And there's this whole aspect right now of CAS, they call it Client Accounting Services, better known as bookkeeping. And what you're finding is accounting firms are doing bookkeeping right now for firms. And the technology has really made that very usable and accessible for firms to work with smaller restaurant groups or larger restaurant groups and doing that going forward. So you're seeing, a lot more of that, and outsourcing as well. And also is the fact there's not as many accountants. So if you're a sole restaurant company looking for your old accountant, there's just not that many out there. So you may be best served by going to an accounting firm that services a lot. So, but we're in a good position because of our knowledge, our team that's involved here to be able to make what we think is a very appropriate match for that restaurant company in terms of service and in terms of available services.
For a restaurant group that has decided or wants to explore other opportunities with regards to their accounting firm or their financial consultant advisor, if they were interviewing or talking with a prospective CPA firm, what would be a couple questions that you would recommend that they would ask right off the bat to see if they're the right fit, if they truly are specialized with restaurants?
Well, I feel comfortable in numbers. So I want to know, how many restaurants are you serving, and can you tell me how many different restaurant clients? What kind of clients? Are they multiple units? Things like that. I'd want to know. Now, I don't know if the restaurant's going to know some of these individual strategies, like establishing them all as S corps and rolling the S corps up into a larger S corp, and you're doing that in order to not guarantee on some real estate. there's things like that you're going to ask. You're going to ask things like cost segregation. You guys provide cost segregation, which allows you to create quicker depreciation on assets. Certainly, it's very complicated in terms of tips and tip credits, and if they have experience at that. But I don't think, if the restaurant knew all those things, then they probably wouldn't be looking for a new CPA. I think you're just looking for somebody who has some real experience at it, and maybe demonstrate to you that they have some tax people who are doing this for a long time. One more thing would come to mind would be state and local presence. When you have an individual or generic CPA firm, you could have a client, and client is usually one entity, one location, things like that. Restaurants are usually a lot different. They could have multiple locations, 30, 40 different cities in different states. So, wanting to know if their ability to function in these other cities and states is something inbred and inherent in what they do.
Yeah, I do. I think from my standpoint, if I were to talk with a firm, a prospective accounting firm, I'd like to better understand um, what their cadence looks like with regards to meeting with the client or talking with the client, getting out ahead, looking forward instead of looking backwards. I think that's one area where SS&G really changed things for my company, was actually planning ahead, was actually being proactive as opposed to just reacting at the end of the year.
Yeah, and that a lot of that. I mean, really, I think two trains of thought there. One, before the year's over, just having a discussion as to what this looks like, because if you want to make any changes in your calendar year end, it's hard to make those changes in February. So yeah, can you do it in advance? But the other side of it too, and you've heard me say this before. One of the reasons I used to love the restaurant industry is I never had a restaurant client that didn't want to open up another location.
Yeah, I love that line.
Yeah, and it's true. And so what happens is, in opening up a lot other location, there's a lot of considerations. How do you finance it? How do you own it? Things like that. So that's a place where we were really able to help in a way that was very, very forward thinking and growth oriented in terms of helping restaurants grow going forward. And as getting bank loans, traditional bank loans to grow a restaurant, sometimes hard, but then you would find that if you ended up buying a franchise, the franchisor may have created a relationship with a national bank because they really trust the franchise to fund all these going forward. So things like that are really helpful that accounting firms that really know the space are going to be able to provide. I used to always say, this is an old term that's going to be gone in 10 years, but one of the things we're able to do is really kind of go through our Rolodex. And it's kind of like, what do you need? Well, I need a head chef. Okay, well, you want to call this Alice lady in New York. Or I need an attorney who really understands this. And you want to call these guys in Minneapolis who we do a lot of work with. We really like them and they only do restaurant work. Or we need somebody to do cost segregation study for us. Is there somebody who can do things like that? So really knowing the industry and knowing different business aspects of what would be helpful to their business and making those referrals that could be really helpful going down the road, advancing, growing.
Well, everyone that I know in the industry was because of you and your team. I certainly left a lot of those conferences, and I felt like I knew almost everybody that was on the restaurant side of SS&G, almost like a family. So I always felt the culture was pretty amazing, and I really was thrilled to have been a client.
Well, that kind of gets back to this whole aspect is that if you really start to know the industry, it's not as there's who the players are, and you get to know them, even as big as it is. And if you're dealing with a CPA firm that doesn't know anybody, then you're not going to get any help. And the help you might get might be some local help, but you're not going to get any kind of national perspective and people who do nothing but this. So that's a reason. It's a really good reason to be working with a firm that really is there because, in addition to getting, paying less taxes, things like that, and you can have access to people who could really be beneficial for you, and that could pop up out of nowhere.
I remember calling up. We had an HR related question, and again, the relationship that we had with your team was so strong that I called them before I even called, I think, our labor attorney, and the response I got was, "Oh, well, you know what? I'm going to introduce you to the chief HR director for Brio Bravo Group." And I was able to literally get on a call with that person within a day, and I could ask them any question I had. And I just remember thinking, that was an unbelievable valuable. I mean, that alone probably saved me, God knows, $50,000. I
Well,
remember that.
yeah, and what happens is they specifically know what's going on in this industry. You call your labor attorney, they have a generic practice. They have to go weed through it, look at the restaurant side of it, and for them to get the learning curve, it could cost you thousands of dollars before they're even prepared to even deal with your issue.
Yeah, I think it ended up costing me nothing instead
Yeah,
of
right.
making this into a big deal. So, well, Gary, I really appreciate it. Thank you so much for your time and all the time that you've given me over the years. So, thank you so much, and I look forward to talking soon.
It's my pleasure. Thanks. Bye.
Thanks.